Okay, so I introduced this course with top-down analysis. So in the top-down analysis, I look at three main time frames. Right? I said you look at the weekly, the daily, and then the monthly, for the H4, right? And you can stick to the H4 and take your trace, or you can use the M30 and the H1 for your entries, right? But I'm going to update this slightly and we'll talk about different things that you'll be looking at here. Okay. So in terms of what we are going to look at, is going to be almost the same thing where we are looking at almost the same kind of concepts. Okay. So what we are going to look at is we are going to add a higher time frame to this. So the higher time frame we are going to add to this will be the monthly time frame. So for someone who wants to hold it straight for a very long time, you need to have a very big idea of where the market can go long term. And what that can do for you is to help you continue to trade in that direction. And any pullback would be a significant move for you to now get into the market. So we'll look at the monthly and we'll also look at the bi-weekly. So bi-weekly means 2 weeks. So what we are doing is we go from the monthly. So monthly divided by 2 will give us 2 weeks. This is weeks. 2 weeks, right? 2 weeks divided by 2 will give a weekly. So we'll have a very good in-depth breakdown of what is happening here before we come to the daily. So the daily is where we'll do majority of our analysis on. We'll do majority of our analysis on the daily time frame. All right, so let's start. So initially what I talked about was that you come to the weekly time frame, okay? You're looking for major levels. You don't want to look at everything that is here. You want to have a look at what is around the price and where price could potentially go around here. So what I talked about is you are looking at major levels that is close to where price is. So this is one of the major level, right? The reason why this is a major level is because of this. This is a major level, price test here, test here. So that is an important level. Another level I'll be considering would be this low here. So the reason why I'm considering this low is this could be a potential head and shoulders pattern. So if you're not familiar with the head and shoulders pattern, we'll talk about it. So a head and shoulders pattern is a very common pattern that happens in the market where you have the market giving you a low, push up, come down, go lower, push up, come down like this, and go higher like this. So you have your first head. This is your So this is an inverse head and shoulders pattern. So we've turned it. So you have your shoulder, your head, and another shoulder. So mostly you have it level like this. So the point I'm making is you can have price testing this level here like this, right? And then pushing up. And when that happens, that will give you us what's a head and shoulders pattern. So that is why I'm marking that level. 1, 2, 3. So we could get a weekly head and shoulders pattern for price to bounce out from that level. So that is one of the reasons why I'm marking this level. So let me clean let me clean everything and mark again. So this will be a level I'm interested in, another level I'm interested in. And let's also take note of this level here. So I'm going to mark the ultimate high here. And let's also mark the weekly low here. So these are the levels that I'm interested in. Okay, and then we go to the daily time frame. The daily time frame, we are looking for structures that is happening here. This is where we actually look for potential levels where price would go to. So I talked about trend lines, right? You could look for trend lines, chart patterns, break of structure, different things happening here. So here, in terms of structure, we see this here. All right, price push here. We've broken this level, pull back here. It looks like there's a high chance price is going to continue pushing down to the next zone here, which happens to be the head and shoulders level, right? So this is pure price action. And I also just noticed that there was a retest of this level here. So price push retested this level here. Okay. So very, very important to take note of that. So this is what I initially talked about. But I had to do this recap so that you don't see that as different, but we are going to add more information to it. So let's go back a little bit. So here, instead of starting from the weekly time frame, we'll start from the monthly time frame. So again, on the bigger time frame, until you get to the daily, you are not looking to do any complicated analysis. What you are looking for is to appreciate what is happening in terms of the structure in general. So in terms of appreciating what is happening on the structure, we can see that, okay, this price was here, came down, break of low, high, right? So let me try and highlight those levels I'm talking about so that it makes sense. We had a high, price created a low, price pushed up to form a high, we created a low, a new high, a new low, and a new high, right? So from what we have here, there's a high chance price might come to test this level here. So monthly level, this is important, but it is not really necessary. I just, because it's going to take a long time for price to shift around. This is monthly, right? So the same thing, we want to mark important levels here. So here on AUD card, on the monthly, we want to take note of this level here. So the reason why we are taking note of this level here, this is a point where you have 2 month candle hitting here. So the reason why these levels are very important, especially on the bigger time frame, is that this is a lot of data that is happening here. Very important. Monthly candle is a lot of volume that is happening here, right? So if I extend this here, we also see that this level was a retest here, right? Price hits this level and we have a rejection here. So very important. And then another thing we'll be looking at here is this level here, right? This level here, very important. And we have the likelihood of price to continue to push down here. So these are the only levels I'm going to mark on the monthly time frame. But because of this wick below here, I'm going to mark this low here as well. Because if price breaks below this level here, we could be going for a wick fill. We could be going down for a wick fill. So let's go to the bi-weekly time frame. So instead of going to the weekly time frame, we are going to the bi-weekly time frame. So the bi-weekly time frame is giving us a break, like more candles going from the monthly to give us more insights on other levels to pay attention to. So in terms of other levels to pay attention to, if we look here, one thing that we can see is at this level. So what we can do is to slightly adjust this level here. Slightly adjust this level here. We don't really have to adjust it because here we have the body and the wick testing the same monthly level, which is very, very important, right? So we don't really have to adjust anything. So here on the bi-weekly time frame, the only thing I might add to it is maybe this. Highlight this high here as a potential level. Price could go to long term, okay? Nothing really of importance here. What I can add here is this because of the same head and shoulders potential here, right? Because of the same head and shoulders potential. So I'm highlighting this level because of the potential for price to give us a head and shoulders here. So there's going to be a lesson dedicated to head and shoulders, and I'll give you all the details on head and shoulders because it's one of the most common patterns. And if you can just master head and shoulders and know how to trade it properly, it could just be something you just stick to and trade head and shoulders and you'll be good, right? So on the bi-weekly time frame here, I'm highlighting this. So one thing is if you don't have the paid version of TradingView, if you don't have the pro or the premium, mine is a premium, so I can do whatever I want. But it's not a big deal. Like if I'm making money, this is like I think the pro is $14 a month. So if you're making money, it's not a big deal. Like it's a tool you would need. So if you're investing in it to give you the luxury to do some extra things, that is very important, right? So this level is important here. Maybe what I'll do here is I might adjust this level here a little bit, right? To cover this high here. I'm done. I'm not doing anything here, right? I'm done. So then I'll go to the weekly time frame and see if there is any other thing that changes from here on the weekly time frame. So initially, the difference between what we talked about and what we are talking about right now is that we would have started from the weekly time frame, but here we went to the monthly time frame because we want to have a very good broad depth because we want to be able to connect and identify all the levels that are important. So the only thing I'll add from here is this level here. This level here. The reason I'm adding this level is because this is a weekly level. We have a rejection here, a rejection here, a rejection here, and a rejection here. So that level is very important. Then I come to the daily time frame. So on a daily time frame, this is where I'm actually looking for shift in structure, right? So this is a modification of the top-down analysis, but let's go back look for let's look for a different pair. So let's look at something like GBP USD. Yeah. All right, so let's start from the monthly time frame. So again, monthly time frame, what am I looking for? Important levels around where prices. So here, in terms of important level where prices, so there is going to be another thing I'm going to add to this. I'm going to add to this totally, right? This is marking your general level. So here, around where prices, there's not much happening here. So when there is not much happening here, what I'm going to do is to look at this region here where prices mark the lowest point here. So if you look at the candles here, this is the lowest. And upper here, I'm not considering the current candle. So this candle here is the highest. So I'm done. I'm going to the bi-weekly time frame. So coming to the bi-weekly time frame, what do I see here? I see that, okay, this is the lowest level within the zone. This is the highest level. There's not really any nearby levels available. But we are very soon, I'm going to add another thing to it where we'll be looking at engulfing candles within the levels, right? So that will come later. Weekly time frame, nothing has changed. But the only thing that I'm going to add here is this high here. So this high is an important high on the weekly time frame. It was not visible on the weekly, the monthly and the bi-weekly time frame, but we can see this high here, right? And another level I'm going to add would be this level here, the body, the body of the weekly candle here. And also I'll highlight the wick here in case price decides to come for a wick fill later in the future. If I go to the daily time frame, and this is where I'm going to actually look at what is happening with the market. So what I can see is that there was an equal high here. Equal high here. Price took out that equal high, which is very important. So here, long term, what I would want to see here is that because there is this low here, market structure, I would want to see a break and a retest. And then we could have a potential long-term sell on GBP USD. But this is not where we are taking our trade. Our trade would be taken from the 4 hour time frame. So the 4 hour time frame here, when we come to the 4 hour time frame, there are so many things that we are looking at, but our focus is on what? On trading the engulfing candle. So here we have price currently. Okay, there's no engulfing candle within this area here. There's no engulfing candle within this area. So what we would want to see is we can adjust this daily level a little bit to this 4 hour zone here. And what we want to see is how price respond to this zone here. But another thing we can be keeping an eye on, it's a potential head and shoulders, which means we have this high here. We could get a next high somewhere around here. And that will give us a head and shoulders pattern for us to sell. Right? Because we don't see any engulfing candle here. But below here, there's an engulfing candle. So we take note of this zone here, which is an engulfing zone. Okay. So if price decides to drop, this is a good level for price to reject, right? But let's not even focus on that. We are doing top-down analysis, how we can break down structure from the monthly all the way to the weekly and then to the 4 hour time frame, right? So this is JBP USD. So now let's look at something else. Let's look at something like GBP JPY. All right, so GBP JPY. All right, sorry. We'll start from the monthly time frame. Again, we are looking for important levels around here. But what we can do before we do that is to highlight the highs and lows within this level here. So if you look at this area here, this is the lowest point here, but we are not interested here. We are only interested in this current level here. This is our monthly low, monthly low, monthly high. Okay. Monthly low and monthly high. Let me change this color to white. Let me make it a little thicker. And let me make it white. It looks like white and blue. Which one is more? Okay, let me make it red instead. Red. So this is our monthly high and then monthly low. Around this level here, another zone I would keep an eye on would be here. So this is the zone here. This is a major resistance, which also happens to be in line with our low here. So here, price created this low here, pushed down, came down, broke this zone, and came back for a retest. So very important level. Another level I'll be looking at would be the high within this region here. The high region, this region, very important. So we take note of the high. And within, because price is above here, let's forget about what is happening here. But if price breaks below, another level we'll be considering will be this level. Price even came too weak here. And that's okay. We don't really need to do so many analysis here. We're only looking at very important support and resistance within our monthly time frame. We go to the bi-weekly, we want to see if there's some changes that have happened here. From our level, we don't really see any changes. The levels we have from the monthly time frame is almost the same levels, right? Weekly time frame, almost the same thing, right? So we are good. So what we are looking to do is so here what we can do is the weekly low here, the low within this zone here is the same as the monthly low and the bi-weekly low, but this high here, which happens to be the high in this region, is not highlighted. So let's keep an eye on this high here. Very important, because this is the high a couple of weeks ago that price rejected. So it's an important level we could get a rejection from. Okay. And now let's get to the daily time frame. So the daily time frame is where we actually look at what is happening with the structure. So here we see price push here. So in terms of market structure, so the daily time frame is where we're actually looking at market structure. So we have a push here, a push down, a push here, push down, and price is here. So price is now testing a very important level here. So if price breaks above here, there's a high chance we will see a long-term push to the upside. But this is a very important key level that price is sitting currently. Very important key level. If price rejects this level, the levels we'll be targeting for the weekly, the daily would be this level and that level, which is some long-term pushes here. Here, I'm not even focusing on the I've not even talked about the demand and supply zone, because that is the main thing that we are trading. That is the main thing that we are trading. I've not even talked about them. That's why I said right now we're only looking at breaking down the structure. And when we're actually looking to take trades, we would now use our demand and supply zone. So yeah, if you're looking to trade with the demand and supply zone, there's a demand zone here. If you see what I'm talking about. So we have this candle engulfing this candle. So what this means is that if price rejects here, long term, this is where we'll see price coming to. So here, ideally, based on what we've learned, right? If we see a demand zone like this, what we are looking for is to wait for price to come here. We will look for a buy within this zone and then buy all the way to the highest point here. So our trade would be here and then we'll buy here. But we can look for other ways of taking a trade down here. So there could be another demand here, not on the daily, because on the daily, technically there is a demand level here. So let me go to the different charts and show you what I mean. So if I look at this level here, so this blue candle has engulfed this red candle, this white candle, right? And if we look up here, where we'll draw our next line for the zone would be this way, because we said we look at the two candles, the one that has the highest wick. If you look at this, you see that the market has not broken above this level. So this is actually very good. And price is most likely going to come all the way down to this level here on GBP JPY. Okay. So this is actually from everything that we've talked about, price sitting in this level where it's a key resistance here. It's also sitting in a very big demand zone where we could be looking to sell this from here all the way down here. Okay, so let me go back to the chart with the markup with how we have, right? So very important key zone here for price to push down here and push back up, right? So this is very important to have a breakdown of the structure from the bigger time frame. And that gives you an idea of where price could potentially go. And even if you want to just trade support and resistance, right? If all you want to do is to trade support and resistance, you need to trade them on the bigger time frame. You need to be looking at the monthly, the weekly, the daily, the 4-hour, and all the other bigger time frame. Because like when price decides or fail to break a major resistance level and it's a bigger time frame, that is not the same as price failing to break or breaking a 30 minutes level, because the higher the time frame, the stronger the level, right? So now let's add everything that we've learned so far. So here we're just looking at a recap of the top-down analysis and adding the weekly, the monthly, and the bi-weekly time frame to it. But now we are going to add the demand and supply to do our top-down analysis. All right. So let's take another pair like Euro JPY. All right. So now things are going to change a little bit. When we are here on a monthly time frame, we want to highlight the major levels to pay attention to. So the major levels to pay attention to, because price is approaching this level here, let's keep an eye on this high here, monthly high here, to see how price reacts to this level. And let's also keep an eye on the next high above here, right? And when we come here, let's keep an eye on this daily, monthly. No, sorry. Sorry, we're on the monthly time frame and daily time frame. Sorry. So let's go back to the monthly time frame and recap. Sorry. Right. So very important. So here we zoom in. This is the low, the monthly low within this region. Here, if I mark the low, this is the high here that price is approaching. Very important. And then we look left, we see there is a significant zone here. So what we can do is I'm deleting this level from here and I'm extending it here because it's the same level from here that is going here, right? So I think this is the only thing. Okay, another thing I'm going to do is to highlight this level here. We have price pushing down here, pushing up, and then coming here. So because of that, I'm going to highlight this zone here, right? And take it all the way down here. So I'm done. This is what I'm doing on the monthly time frame, right? But another thing I'm going to highlight is the demand zone here. No, this is a supply zone because it's here. We are looking to sell from this zone. So we have this blue candle engulfing the white candle, if you know what I mean. So we'll draw our zone like this. So this is a very important key level because this is a. So now initially we're just looking at highlighting support and resistance. Now we are looking at adding the demand and supply zones to it. So here around this region, I don't see any demand zone here. There is actually a demand zone here. There's a demand zone here. This candle has engulfed this. But we already have price tap into the level. But it's still important we highlight that level. So you can use different colors to highlight your levels, your support and resistance levels, your demand and supply zones. Or you can use the same color, but then you can take notes, write notes in it, right? You can have notes like this. All right, this is supply. This is supply. This is demand. Different people have different, this is writing or like taking notes. Different people have different ways of going about this. So this note is hidden. When you click on it, that's when it will show, right? So now let's go to the bi-weekly time frame. Let's see if we see other zones here. So inside this monthly zone, there's also a bi-weekly zone here within the same level. So we can keep it like that, or because it's still within the zone, we'll just let it slide, right? And another thing here is on the bi-weekly time frame, so the reason why price is actually pushing up is because of this zone here. We see price within this zone. Okay. So this white candle has engulfed this. So ideally, if we saw this and we're looking to take a trade from here, so our zone would be below the wick. So we see this blue candle coming into the zone and then closing. Ideally, this is where we are looking to take a trade to the upside, but we could have gotten a trade on the lower time frame, right? So then we go to the weekly time frame, right? So we could have gotten it in a trade from this weekly level, taking profits at the top here based on the demand zone from the bi-weekly time frame. Yeah. And then let's finally go to the daily time frame. So on the daily time frame, we know this is a very important high from the monthly that we can see price going to finally. So on the daily, you see this is more cleaner. If we saw this rejection of here, we could have taken a buy here and taken our profit here, because this whole zone is what? This whole zone is a monthly demand zone that we identify. So we could go here, take our trade at the close of this level, right? Stop loss below that wick. And then we go for the TP. So this is 1:2.9 risk reward ratio. So this is a very big trade. Even though your stop loss is 150 pips, your take profit is 441 pips. So very good trade if you are using smaller lot size, like 0.01. If you're using 0.01 on this trade, you are risking $15 to make. You are risking $15 to make $44. If you are using 0.02, you are risking $30 to make $80, which is very, very good. Right? If you are using one standard lot, you are risking 1,500 to make 4,400. So this is a very good trade. 1:2.9, almost 1:3 risk reward ratio. Very important, good trade. So we could get trade from the daily time frame like this, but ideally we are looking to pick our trades from here. So if we find a trade like this on the daily time frame, that is perfect. But ideally we want to take our trade from the 4-hour time frame. So here we could get other smaller trades on the way. We already know that, okay, this is going to go up from the daily time frame, but here we could pick a trade from here like this. So here we have this zone here, right? This candle hasn't got that candle. I hope you see that. So let me draw that zone. Boom. So these smaller trades within what we are looking at is what is going to give us the money, because if we are now taking our trade at the close of this candle here, right? And our stop is below the zone, and we are going for the same take profit, right? This trade is what? 1:4 risk reward ratio. So this is a way higher trade, risk reward trade within this trade. So we can have our bigger trade here from the daily time frame and have other smaller trades like this. Here, you see another trade here. You could take another trade here. All right. We have this white candle engulfing this blue candle. So at this rejection, we can have another trade here. So this trade, we take this trade here. Stop below here. And boom, another one is to take risk reward ratio. So we have 3 trades. This is a bigger trade, but let's say you are risking 1% on every trade. You make, if the price hits TP, you make almost 3% here. You make 3.2% and you make 4%. So let's say you are trading a funded account and you are risking only on this trade, even though it took a while, just this trade on just this pair is going to make you pass your account, because you are risking 1%. So 1% to make 4%, 1% to make 3.2%, 1% to make 3%. So you make 4, 3, and 3. That's what 10% on one trade. Very, very important. We are not drawing anything. We're just here. At this point, we are only looking at demand and supply. We're not even doing anything like, how do you call it? We are not doing anything drawing trend lines or doing anything. We're only using exclusively demand and supply. So let's take another pair. Let's look at something like gold XAUUSD. So let's look at the monthly time frame from gold. So from what we've talked about, monthly time frame. Monthly time frame. So here within this region here, we want to give an eye on the low here. The low here. Right. We also want to keep an eye on this low here. And above here, it looks like gold is making an all-time high. So there is not really any high above here. So because of that, we'll just highlight this high here. If price breaks here, that will be the all-time high, which means this is the highest level gold has ever been to. The highest level gold has ever been to here. So here what we see here, we have an engulfing candle here. So this candle has engulfed this. So in the bigger scheme of things, we see this candle close above here. So this is an engulfing zone. So we can mark this engulfing zone. So the whole zone is an engulfing zone. So on the monthly here, if gold breaks above, closes here, we could get a retest into the zone. But what this means is that gold could make a very big push to the upside, a very continuous push to the upside. So this is all we can do here on the monthly time frame. Let's go to the bi-weekly time frame. Because gold is making an all-time high, there's not really any much price action here. So what do we see here? We see, so this was a supply zone, but price did not respect their zone. So ideally, that's why it's important to wait for the rejection. But here you see price came into the zone, boom, close above. So it has invalidated the level. But here what we see is that you see the level is being used as what? A resistance. So price broke it and retested it at the opposite side for the push to the upside. And then we have the weekly. So here, very important, what do we see here? Price has created a weekly supply zone. So the zone below here is a monthly, and price has now created a weekly demand zone here. Sorry, I mentioned supply zone. So this candle has engulfed this. So this means that price is not going to come back here again. So from the weekly right now, okay, I'm using this level here. I don't want to use the same color. So this is our zone. What this means is that based on the way this candle is closing here and the way it's rejecting, gold is most likely going to, it's not most likely, gold is going to push from here to this level here. So if this candle closes, we have a potential 1:1 risk reward ratio trade on gold from the weekly time frame, right? So from here, we take our profit here. So there is 1:1 risk reward ratio. We might not take it on the, or this is what we are looking at. We know, okay, gold is going to push here. So let's say, for instance, there's a lot of pips. If you're taking the trade from here on a weekly time frame, especially on gold, you'll be risking a lot. You'll be risking a lot because this trade is like 600 pips. So let's say if you still want to take a trade like this from the weekly time frame, it is not bad, but you have to reduce your lot size. So for instance, if you're using 0.05, right? It means you'll be risking 300 to make 300 because it's 1:1 ratio. 300 to make 300, right? Daily time frame. So daily time frame, we see prices very bearish. We had a big drop here. So this is what we need to watch out for. If this candle here, daily candle, engulfs this candle, that changes everything. Even though we have the monthly level here, price might come down into the zone again. It means price will now push down into the daily zone, push back into this level. So that's why I said we could get a more a less risky trade. So when that happens, it means your entry is no more going to be here. Your entry is going to be somewhere here. So in this case, your risk reward increases significantly from 1:1 to 1:2.7. So now you are risking 300 pips to make 900 pips, which is very significant. Okay. So according to what we have here, it means price is very, very bullish. So when we're talking about demand and supply, I said when the zone is created, it means price is bullish. Anytime price is above the zone, it is bullish. And if price is below the zone, we are out. We are bearish. Okay. So now we switch to the forward time frame. Nothing much here, but it's important to keep an eye on that price. If this closes bullish, we'll push up here, come into this zone. So we'll be looking for potential buys. So the forward might give us a more better entry here for price to push to the upside. Okay. So this is going to be top-down analysis part 2. So here, what we've talked about so far is we've added a monthly and a bi-weekly, and we've also added looking at the engulfing zones and using it to break down from the monthly time frame all the way to the 4-hour time frame. So there's one trade here, one trade recently I took. I think it's on NZD card. NZD. Okay, yeah. So this trade is still here. This trade is still here. So this trade is very good, right? To give you a very good example of how you can break this down. So let's start from the monthly time frame. You go to the monthly time frame, and there is a zone. So in that case, that's what I'm looking for. I'm not even concerned about anything. We have this candle here engulfing this white candle. So boom, boom, price on the monthly, reject several times. And then we have another rejection here. Price came back to retest here, right? Let's go to the bi-weekly time frame. On the bi-weekly time frame, if you didn't take the trade from the monthly, right, you are looking for, let's go back. You're taking this trade from the monthly, from what we've talked about. If you decide to take your trade, so this candle goes here, this one rejects, right? So you are looking to take your trade from here, from that candle here, from after the close of this candle, right? If you're looking to take the trade from there, your take profit is at the low here, all the way down here, and your stop is above here. So here you have 1:3 ratio. Your stop loss is your stop loss is 300 pips. Your take profit is 950 pips. So 1:3 ratio. So yes, so this could be the ultimate trade, right? The ultimate trade here. But then if you go down to the bi-weekly time frame, the market presents another opportunity where we have another zone. So this is a weekly zone here. A weekly zone engulfing. So we have this candle engulfing this candle. So we draw another zone here. So when we have the zones like this, at that point, we don't even need to look at all the other structures. Here we know that, okay, this is bearish. That's all this important. Now we mark our zone, right? So price tested the zone, rejected. So here, this is where we are looking to take our sell. The close of the bullish candle. We have another trade here. Stop above the zone. We are going for the low. So two different trades, two different risk to reward ratio. But when you take a trade like this, even though your final take profit is here, you need to pay attention to levels like this. You can take partial profit at levels like this, okay? And then here you go to the forward, from the bi-weekly. So we're on the bi-weekly. Go to the weekly, right? There's no zone here. Maybe this week might create another zone where price might push back again. But we go to the daily time frame. Daily time frame, and we see that, okay, price has created another zone here, right? Another zone here. So this candle has engulfed here. So this could be another trade again. if we want to take another trade, but the zones are overlapping. So we can take another trade or just let the bigger trade go. But what we can do here is we can take another trade from here, from this zone here. So I'm going to use the yellow to mark the zone. So here, this candle has engulfed this. So here, because of the way this bearish candle rejected here, at the close of this white candle, we go in for the sell here. So we go in for the sell. What this one is going to do is that this one is going to give us a way bigger risk reward ratio because our stop loss is just going to be above the zone here. And here, even the take profit one here is what? 1:3 risk reward ratio. If we decide to go all the way down here, that is 1:10 risk reward ratio from the daily time frame. Very, very impressive. So this is the same setup we are looking for, giving us different setup from the same currency we are looking for. They're giving us different setup from the monthly, from the weekly to the daily. And then we go to the 4-hour time frame finally. What do we see here? Another opportunity. So here, what happened here was that the market created another zone. So there's an engulfing zone. Price push down, created. So this candle engulfed this candle here. So you mark your zone like this. Boom. And you have price coming into this zone. So at the close of this bullish candle here, this is where you're looking to get into your trade. Boom. And your stop loss. Sorry. Your stop loss is above the zone. Somewhere here. Okay. And here, this is 1:3 ratio. If you decide to go all the way here, you use your monthly time frame target. This is what? Very long-term trade. And this is what? 1:9 ratio. Right. So how many trades do we have here? We have 3 important trades here. I think there were even 4. No, 4. Yeah, there was another one here. 4 major moves here. So this is a trade from the monthly, this is a trade from the weekly, this is a trade from the daily, and a trade from the 4-hour time frame. So we are making multiple percentage on our trade with all these different trades. Does this make sense? So I hope this makes sense. So when you have the zones like this, even though we are going from the monthly all the way to the 4-hour time frame, we're just trading in the direction of the zone. So here, there are so many things that we can look at. If we're looking at in terms of market structure, we know that, okay, here, this is our high. Yeah. Price broke the high. Price broke the low, created a new high, low, high. We've broken the new high, the new low, right? So this is actually very bearish. We could use so many things like connecting trend lines, doing all those things. But just our demand and supply zones are enough to give us very quality trades like this, right? Right. So this will be the end of the demand and supply. Sorry, the end of top-down analysis part 2, even though we looked mostly, we added, like I explained, we make an adjustment with the time frame, and we also use the demand and supply to analyze trades.